Hey, Puppy Trades! I wanted to do a video analysis update on my top 5 investments I made this week related to cryptocurrency. Presented by Puppy Trades. Warning, this video is for entertainment purposes only. It documents my own investing and is not investment advice to anyone. I'm not a certified financial advisor. I am an investor, and that's how I live, so to speak. Uh, the top 5, 4 through 5, you guys are already familiar with. I've been buying the covered call strategy ETF on SQY from Yield Max. So we see this ETF has a 65% yield, an expense ratio of 0.99. It sells out of the money synthetic covered calls. What that means is it has a long call option with a delta of 50. It has a short put option with a delta of negative 50, but it's a short. A negative 50 is a positive 50, plus the call delta of 50 gives a delta of 100. They use that delta of 100 to sell an out of the money covered call against that position. And so that is what SQY does. Blindly averaging into SQY since its inception has given a 61.7% total annualized return. I've done Elliott Wave of SQ and shown why the 127.2% extension of the length of wave 1 place of the wave 2 low is where 116 gives this wave 3 target before a shallow wave 4 and a wave 5 higher. That would all be very good, in my opinion, for SQY. I'd get to benefit during this wave 4 correction. We got a lot of confirmation from Shopify in the eCash sector that at least one of these eCash stocks in ARKF is forming a strong impulse. Big things coming from e-commerce. Number 4 is targeting 0.67 YETH and 0.33 ETHV or ETHW. ETHW and ETHV have a 0.20% expense ratio. However, ETHV has a fee waiver. I'm going to read that right now. During the period commencing on July 23rd, 2024, and ending on July 22nd, 2025, the sponsor will waive the entire sponsor fee for the first 1.5 billion of the trust assets. So we can see we're below that right now. We're at 1.12. If the trust assets exceed 1.5 billion prior to July 22nd, 2025, the sponsor fee charged on assets over 1.5 billion will be 0.20%. All investors will incur the same sponsor fee, which is the weighted average of those fee rates. After July 22nd, 2025, the sponsor rate will be 0.20%. So a little bit of a fee waiver going on there with ETHV. Look at this, very beautiful right here. 1, 2, 3, 4, 5, large wave 1, A, B, C, wave 2, and then from this low, a wave 1 and an A, B, C, a wave 2. Gorgeous reactions from this GAN fan. I'm looking for the length of wave 1 placed at the wave 2 low to be where wave 3 ends in the upper 5,500 range. 5,000 to 5,500. We can see this ETF yields 58% right now. What I do is I blend these ETFs together. So I have uncovered exposure to Ethereum, Ether, and I also have these massive call premiums coming in, currently yielding 58%. I'm expecting that that's actually going to raise or go up higher as we see Ethereum rally higher. We get a call skew. Number 3, I bought XRP. I bought Ripple. So I've gone over Ripple a lot, the technical analysis, that this is a wave 1 and a wave 2. This is another wave 1 and an ABC wave 2 correction. So I connected the time fibs, the beginning of the wave 1 correction to the end of the wave 2 correction. And we had 1, 2, 3 right here. I said this was a really important time fib. It ended up being a very important time fib. And we're in this blast off phase right now. The 61.8% extension of wave 1 is 3.10. I'm ultimately expecting a lot higher than that. My average cost for XRP is 0.745. I wanted to give a little bit of a background on XRP's utility. For those who may not know, most of these coins I entirely just focus on the Elliott Wave. I'll tell you personally, I don't believe most of them have any utility at all. I believe a lot of it is vaporware, and I believe that most of it intrinsically is worthless. I would say Ether, Bitcoin, and Ripple are probably the three most well known for the best reason, because they have the most utility, they have the most asset backing. Blockchain based cross border payments, Ripple and XRP solution. Blockchain technology, and specifically Ripple's XRP business, provides an alternative solution to these inefficiencies. Here's how it addresses the main issues: speed. Blockchain based cross border payments are much faster than traditional payment systems. Transactions using XRP can be processed in 3 to 5 seconds, regardless of the time zones or countries involved. This is because the XRP ledger operates on a decentralized network that allows for real time investment, lower cost. With Ripple's on demand liquidity ODL product, payments can be made directly from the sender's account to the recipient's account, bypassing the need for intermediary banks. This reduces the number of entities involved in the transaction, which lowers fees. XRP also serves as a liquidity bridge, which reduces the cost of converting currencies. So, really saving money on converting these currencies was something that caught my eye. There also is a limited supply. 100 billion XRP were initially introduced into the supply. Transparency. Every transaction on the XRP ledger is recorded on a public blockchain, providing full transparency. This means the sender and recipient can track the transaction in real time, reducing the uncertainty that exists with traditional cross-border payments and currency conversion. This part is pretty cool. XRP solves the problem of currency conversion by acting as a bridge asset. When a payment is sent, XRP can be used to quickly and efficiently convert one currency into another. This eliminates the need for multiple foreign exchange intermediaries and provides a more efficient, real-time solution for currency conversion. So I think this is really important to know for the Bitcoin crowd, because Bitcoin doesn't really realize that possibly this is the scariest competitor. And I know it's really kind of silly. While Ripple is at 88 cents and Bitcoin's at $88,000, this could ever be a dynamic where one day Bitcoin is crashing and Ripple is ripping. But it's something I take very seriously, and I see the very easy hedge for this scenario is to simply invest a small amount of money relatively into Ripple, and then buy the next Bitcoin, so to speak. There are also, of course, other ways to prepare for a Bitcoin crash. So we are going to get into that in later videos. I'm going to incentivize a little bit, but one of my best investments, Coinbase, I invested a lump sum at the CONY inception. That went very, very well. I updated Coinbase in the second quarter of 2024 very well, and also in the fourth quarter and third quarter of 2023 very well, mostly the fourth quarter. Blindly averaging into CONY without a hedge is an 83% total annualized return. What I'm doing is I'm taking 3 parts CONY and 2 parts fiat, because we're seeing Coinbase is in a bullish uptrend. I'm expecting the calls are going to be skewed for a pretty long time, at least until we see 398 to 466. I'm leaning towards 466 being the more important target, and then Coinbase could have a shallow wave 4 and a wave 5 higher. So Coinbase getting this direct exposure to the downside with these 2 parts fiat, also getting an extreme amount of income with 135% dividend yield. That was when Coinbase was in the 19 to 20 range. I had an average cost of around 15 to 16. My yield on cost was extremely high. It might have been in the 200%. I have a very similar thing going with MSTY. Hint, hint for the next slide. So 3 parts CONY, 2 parts fiat. Selling options on Coinbase with a bull bias. Original position covered from September 2023 and Q2 2024. I like it. I get a lot of income from it. A mystery position. I can take all that income and I can put it into this mystery position. It must be unlocked. 300 views by the end of 11:15 Pacific. 30 likes by end of 11:15 Pacific. Or 4,770 subs by the end of the day, Saturday. We'll make that Pacific time as well. I'll give you the back test though, from 4.3 to 11.7, putting equal sums into these ETFs. They're a pair trade that ideally protect from Bitcoin to the downside, plenty, and they also get tons of exposure to Bitcoin to the upside. So it's a win-win. One of the rare ones where I'm really going full quant. That's why I'm making it so hard to unlock. Blank turns 80K into 43K, and that the ETF that it goes against turned 80K into 125K. So 160K turned into 168,000, and this was net short Bitcoin. 160K turned into 168K net short Bitcoin. Think about that. Bitcoin has gone up a ton from 4.3 to 11.7. 160K turned into 168K in 151 business days. Net short Bitcoin, a total annualized return of 8.92%, being wrong about Bitcoin. Oh man. So what happens if it was delta neutral? It wasn't picking the bearish direction. Back testing 0.25 blank and 0.75 blank from 4.324 to 11.724. 20K in blank turned into 10,785. 80K turned into 125,129. So 100K turned into $135,000 in 151 business days for a 67% annualized return. The two ETFs that are blanked have a 0.94% correlation coefficient, so they can be scaled forever.